What is going on, guys? Today we're going to talk about how much it takes to become a millionaire, a bit across various different time frames. And going to look at some averages from different asset classes and pretty much how we can get to that goal. Okay, so let's go ahead and over here to Chat GPT. What are some of the best performing asset classes? Okay, so looking at some of this historical data, so they said equities or stocks has an average annual return of about 10% before inflation. Real estate looks like to be 8%. Private equity 15 to 20%. That's pretty nice. Bonds 5 to 6%. Commodities, hedge funds, cryptocurrency. Cryptocurrency has been on a tear. Um, But okay, so and pretty much to summarize it here, it looks like equity stocks 7 to 10%, real estate 8%, private equity 15 to 20%, and so on here. Yeah, crypto's been on an absolute tear. Venture capital 20 to 30%. That's interesting. So we're gonna just assume some numbers here. It could be a collection of multiple asset classes, but let's just say you're starting out with $0 and you're just going to kind of dollar cost average into some of these investments. I know some of these probably has like like a minimum investment per se, but for this kind of example purpose, let's kind of just illustrate starting at zero. We're going to first have the monthly contribution of $500. And then we're going to assume, let's just do 20 years for now. We can always scale it out a little bit further. And then the first one was 10%, which was like 7 to 10% for stocks. So we'll just go ahead and assume all these. I know inflation's definitely been a lot higher more recently, but let's just go ahead and assume a 3% average annual inflation rate. So we'll bump that down to 7. And then we'll calculate here. After 20 years, investing $500 a month and receiving an estimated compound annual growth rate of 7%. Understand that this number can fluctuate, right? Like stocks go up 20%, down 10%, up 25, down 20, whatever. But just for this chart, it's a compounding. It doesn't kind of illustrate that part. But after 20 years, you've made almost $250,000 in investment gains plus the contributions. So it looks like you've contributed 120,000, and your investment has doubled. So pretty cool there. Let's go ahead and scale it out a little bit further to 30 years. 30 years, you're over $500,000. So pretty cool there. Almost, getting closer to that $1 million level. Okay. Okay. So let's go back to 20 years and let's bring this down. Let's say you can get a 15% annual compound, growth rate. That might be a little bit harder with passive investments, but there may be some more active ones, or we saw there's some venture capital or some other riskier asset classes, maybe even crypto. But let's say you get 15%, and then after a 3% inflation, it drops to 12%. Let's calculate these numbers and kind of look at this. So after 20 years, you're at 432,000. So getting better there for sure. And then after 30 years, I imagine this probably will break $1 million. Yeah, at 1.5 million. So you've contributed 180,000. And if you can consistently get 12% per year, you're almost at 1.5 million. So very nice there. This is just another important reason why this interest rate you can get every year is very important, because compound interest is just going to multiply, definitely based upon that. And this is all at $500. So let's go and scale this back. So let's do the 7% again. Let's say you're able to do $1,000 for 30 years, get you to 1.1 million. 20 years, almost 500,000. So pretty massive there. And then, same with this at 12%, you're almost $1 million in 20 years. And then at 30, almost 3 million, coming in at 2.895. So obviously the more money you can put in, if you can double that, $2,000 for 30 years, you're looking at almost $6 million. So a lot of money in there, from compounding, and this is very magical, right? The more money you can get working for you, the more that obviously the more time that has to grow, and exponentially grow, as you can see in this example here. So $720,000 contributed, turned into almost 6 million. Okay. And then kind of circling back, let's just say, you're able to get closer to that 20%, or, 25, let's say 25%, or let's say roughly 20% net after inflation. So maybe like 23, 24%. Let's kind of run through the numbers again here. So $500 a month and you get 20%. That puts you a millionaire after 20 years. So pretty crazy there. Being able to consistently make 20% per year could be definitely challenging. But there's definitely assets out there that, whether it's your own business or, whatever it might be, it could be very risky. But I think, people are definitely doing this. Let's bump this out to 30 years, $7 million. So very massive there. And then also, if you want to bump it to $1,000 per month, you're looking at $15 million. Putting in $360,000 and it grows to 14.1, almost $14.2 million. So pretty incredible there, to say the least. Obviously, some of the most important things is time. However, how long do you have to make money? How long do you have until retirement? That is a huge asset, and a lot of people in their 40s, 50s, 60s wish they had more time to compound their money, versus someone in their 20s or 30s. And then interest rate, like we mentioned, stocks probably do 7 to 10% per year before inflation. So you're gonna have to level that up a little bit. At least index funds. So you can pick individual stocks, but understand the risk with individual stocks is, they don't always consistently go up year after year. You can definitely pick some winners, but you can also come across some losers as well. And then you can also potentially sell covered calls. That's a whole nother strategy. A lot of people have been aiming for, 1 to 2% per month. It's definitely an advanced strategy, and being able to consistently do that definitely can be challenging. But there are people out there doing that, and that's an option as well. Or running your own business, that's obviously the sky's the limit with that. Your gross profit margins can vary a lot, and I feel like you have the most control and opportunity there, compared to just passively buying into big S&P 500 stocks or companies. They call it the S&P 500 or S&P me or whatever. Invest into yourself, invest in your own business. Sometimes can work out for you if you have that entrepreneurial mindset and skill set to be able to weather. But yeah, guys, that's gonna be probably the rundown for this video. Hope you got some value from it. Let me know what you think down below. I'll leave a link to this compound interest calculator as well, so you can go run some numbers and create some illustrations for yourself as well.